Hi, I'm Rob Beardsley, founder of Lone Star Capital.
And I'm Craig McGrother, Director of Business Development, and we're here at our latest acquisition in Dallas at Grand Riviera.
I know it's a cliche, but it always starts with location. And here we're extremely excited to be in the Irving submarket of DFW, where there's over 2,000 corporate offices nearby, as well as over 30 Fortune 500 companies. Not only that, we're also just a mile or two away from DFW, the fourth busiest airport in the world, where there's also an additional American Airlines headquarters and terminal currently under construction. The next key feature of this deal is the business plan. We're going to be renovating the interiors to raise rents by over $150, as well as curing deferred maintenance on the exterior and enhancing the amenities. At the end of the day, location and business plan don't mean anything if you're not getting it for the right price. We are buying Grand Riviera for just over $145,000 per unit, which is a major discount to recent sales comparables. We think now is an excellent time to get into the DFW market and buy a property like this with so much upside. We encourage you to dive in and learn more about investing with us at Lone Star Capital. Come find out what we love so much about this deal. Hi, I'm Rob Beardsley, founder of Lone Star Capital.
And I'm Craig McGrother, Director of Business Development. We're here at our latest acquisition, Grand Riviera in Dallas. Why don't you tell us about this opportunity?
Yeah, it's really exciting to be here. This is a beautiful 206-unit multifamily property in the Irving submarket in Dallas, which is widely considered the hottest market for multifamily investing in the country.
Without a doubt. And this is one of those markets where it's not easy to find a deal. So how did we land this opportunity?
Yeah, this was a unique deal where we were, luckily, not the highest price, but we won the deal because we provided the best terms and had the best reputation, and therefore were able to provide the most certainty of execution. And the reason why the seller needed certainty of execution is because they are winding down their fund, and this is actually the last property in their fund, so they need to move this property in order to be able to close down the fund and move on with their business.
That's a very compelling story, and we're buying this for a very attractive basis. $30 million for this property, about $145,000 per unit. Do you want to dive into the business plan?
Yeah, we have a very robust business plan planned for Grand Riviera. Because this is a 1972 vintage asset, which is honestly a vintage that we normally avoid, we had to do a lot of upfront due diligence and model the business plan in order to get comfortable with buying an older asset like this. And thankfully, this property actually has really good bones for a 70s asset. We actually have copper wiring, we have PVC plumbing, and we have individual HVAC, so there's no boilers and chillers. And we also have pitched roofs.
Yes.
All those, to me, are really important features of what we would consider older workforce housing, but not problematic, where there's deferred maintenance that's going to pop up and really kill your business plan down the road. But speaking of deferred maintenance, we're also budgeting in total almost $20,000 per unit in capital expenditures in order to renovate the interiors as well as cure deferred maintenance on the exteriors, and then of course enhance and upgrade amenities as well.
Yeah, and I think it's really interesting to make this point as well, which through this last business cycle, there's not a lot of opportunities that haven't really been picked over. This deal hadn't really been, turned over, really improved over the life cycle of the ownership of the seller. As you mentioned earlier, they acquired this property in 2018, and they left a lot for us to do, which is great. I think so many people in the marketplace want to do value-add deals, but you really need to make sure you're getting paid for your improvements. And I definitely feel like this is the opportunity to do that. Do you want to dive into some of the interior and exterior renovations?
Yeah, that's a really good point. Most deals have been picked over, so even though that value-add business plans remain the flavor of the day, it just becomes harder and harder to find those true value-add opportunities that haven't been picked over already, like you said. So here we're really fortunate to be in a position to actually take existing units that may have white appliances or black appliances, laminate surface counters, old flooring, old hardware, old cabinets, really just the works. We're able to come in there and just completely transform these units in order to command a $150 plus rental premium, which is a core component of our business plan. The other key features of our business plan are implementing bulk internet, which provides Wi-Fi to every unit in the property, and by buying the Wi-Fi in bulk and then reselling it to the tenants, we're able to actually reduce the tenants' costs for Wi-Fi. So it's a win-win. Tenants save, and the property creates an additional revenue stream.
Well, the Wi-Fi also makes it really convenient. So it's a plug-and-play situation where you can move in, not have to worry about that logistical sorting on their behalf, and have it be a more seamless transition getting into the property, which is always nice. And it's really nice, as you mentioned too, about the property itself from a value add perspective. This is a nice cosmetic improvement. So a lot of the times you see properties or value add, it's really, really deep and can get muddy. But considering that the structure and the bones of this property are so well, we get to do the fun cosmetic, improvements where everyone's gonna get the nice before and after pictures to show the improved bathrooms, kitchens, flooring, so on and so forth. And also, I believe we're gonna budget for the exterior paint as well. So this really will be transformed from full cycle soup to nuts here.
Yeah, I mean, we are definitely rolling up our sleeves and getting our hands dirty on this one. We're doing roof repairs, foundation repairs, painting the exterior, and other miscellaneous deferred maintenance across the site.
Let's dive into the submarket. What gets you excited about this specific location?
To me, this location speaks to exactly what we look for at Lone Star Capital. We're in the workforce housing pocket of Irving, nestled between DFW Airport, the fourth busiest airport in the world, and then to the east, we have Las Colinas, which is nicknamed the headquarters of headquarters, where there's over 2,000 corporate offices and over 30 Fortune 500 companies as well. So we're right in the middle of things, but we're not where the exact growth is happening, because that's where there's a lot of new supply issues, which we're seeing in Las Colinas. But here, there's no new supply in a 2-mile radius. We've got older product that we're competing against, and so that's more stable workforce housing. The other thing that I really love about this particular deal with the location is the fact that we have the largest floor plans in the submarket. So that's kind of one of the upsides of being an older property, is people don't build properties like they used to. So this property is over 200 square feet larger than some of our competitors, yet we're comping to having similar rents. So this will be the best option for families looking for an affordable, comfortable, safe place to live that's also spacious.
Speaking of families, this property really does cater towards that. You've got 70% 2 bedrooms and 3 bedroom units, which is really great to keep families here, keep tenants here, and also, it's truly for workforce housing. So this property kind of hits all the key elements that we love to own, operate, and manage at Lone Star. Now that we've gone through the fundamentals of this deal, can you tell us about the debt structure?
We're using a pretty creative debt structure on this deal by using a 5-year fixed rate Freddie Mac loan coupled with a preferred equity tranche above that for a total of about $24 million of debt, which is around the same amount of debt proceeds that we would get in a bridge loan scenario. However, this package is superior to a bridge loan because we're able to have a cheaper cost of capital, dramatically reduce risk by having a fixed rate as well as a longer term of 5 years instead of a typical 3-year bridge term, and we retain the flexibility to exit the loan and the preferred equity loan in 24 to 36 months.
Thank you, Rob, so much for walking us through this deal. And for those back home, thank you so much for your time. If you'd like to learn more about this opportunity, Grand Riviera, or learn more about Lone Star Capital, feel free to email me here below.
At Lone Star Capital, our mission is to provide you great returns, great communication, and to help you sleep well at night. We look forward to partnering with you on this opportunity and beyond.